Jason Kremlin,
I'm here, late.
Ryan Mahoney, William Fecody is excused today. Also in attendance, we have Mark Onesi, Mark Perubi, Jeremy Gertz, Mike Dudley, Susan Barone, Julie Lamoureux, Joseph Brenda, Mark Gabriel, and Elizabeth Hughes, agency consultant.
Wonderful. In your packets this morning, you will see the minutes from our February 18th Audit and Plans Committee meeting. If we could take a moment to review. Can I get a motion? I will move to accept as presented. Can I get a second?
I'll second.
All those in favor? Aye, perfect. Next up, you will see our audit report from Lumsden McCormick. Should we, anything, Mr. Dudley, anything to say about this?
Oh, see,
He's
talking out there.
Okay.
Mike Dudley,
Sorry, I thought you were sitting down. I apologize. Yeah, it was. Why don't we move on to 4.2 real quick, and then we'll come back to 4.1. In your packet, you'll see the agency payables for the period of February 1st through February 28th. Everything appears to be in order. Can I get a motion to accept as presented?
I'll make a motion.
I will move. All those in favor? Any opposed? No. Next up is our month-to-date and year-to-date budget variance reports. Everything appears to be in order. I will move to accept as presented. Can I get a second?
I'll second.
All those in favor? Any opposed? Hearing none, that's accepted. Can we go back to our audit reports are in our packet? Anything to speak to about that?
Well, Seth Henry is here from Lumsden. He has a presentation that's in front of you there.
Perfect.
You want to go over it?
I will hand the floor to you, Chair. Stand over here, Sean. Behind it.
So if you're with Jenna, and we're going to go through just the presentation which summarizes all of your various audit reports. We have 5 different audit reports. We're going to just do a really high level summary of this. So on page 1 is the summary of all the deliverables that we have. So you have 5 different audit reports. Each of those reports has an unmodified opinion that says what we found is all your reports, all your title statements are in accordance with the accounting standards that you're required to follow. There are various standards. Because you have entities, you have 3 different government entities, you have a trust, and then you have a for-profit limited partnership, even though that's partnership by NFTA and NCIDA, it's still a for-profit business. So there's different accounting standards, all these, but essentially all of them are free of any errors. You also have a government auditing standards report on your government entities. Because being a government, we have to follow additional requirements for internal controls and compliance, and there was no findings in that report. You also have to follow New York State's 2925-3F requirement, which basically just says anything you invest money in is safe. You're not buying stocks and things like that. So that report has no findings in it either. We also do a special purpose statement on your MPF operating account. So that's basically another statement that goes through and audits the numbers that are part of that facility, and then splits out the breakout between the transfer that goes to NFTA and NCIDA. We audited the NADC trust agreement with various paragraphs, making sure the expenses there are in accordance with those agreements, and again, no issues. It does include NCIDA and NCDC federal grants, which are the loan funds. And so we are required to do what's called a single audit, which is a compliance audit of those funds. We had no findings on that. The only thing left on that will be a data collection form to electronically file these reports, which we'll have done in the next few weeks, and Mike certifies it and it's all set. The NIIA partnership tax return is done, and the NCDC has a nonprofit tax return that's due 5/15. So those are the various types of things that gets reported on, but they're all basically done or in process for the due dates of the nonprofit returns. Page 2 is the summary of the communication with the board. This is really anything we have to disclose, any major issues. We had none, so the report just says a bunch of things like we have no disagreements, we have no issues, no one corrected misstatements, things of that nature. It does explain some things that the audit was conducted in accordance with the plan, scope, and timing of the audit. Remained independent, and just a reminder that your statements do include various estimates. So, like I would say the things we can test to the bank statement to the dollar, if you know what the number is going to be. Certain things as listed there are more estimates. They're based on actuarial. We make sure those estimates are reasonable. A lot of those things are the pension, the New York State pension system, and your allowances for your receivables and depreciations. Those are the big estimates, but we have no issues there. They're all consistent with prior years. Since I mentioned the allowance, NADC has no allowances on their receivables, and then the NCDC has about $180,000 of allowances. But that's a little bit misleading because $140,000 of that is a planned allowance where it's a forgivable loan. So it's there until you have to go through the process of the company meets the requirements and you forgive it officially. But yeah, so other than that, there's no findings, no issues on any of those things. And Jenna's going to go through some of the numbers on the next few pages.
Thank you, Seth. So we're just going to do a high level kind of overall variance year over year by entity. So starting with NADC, looking at the balance sheet, overall assets of about just over $5 million. That's up from last year due to a new loan that was issued at $500,000, offset by your expected payments of about $186,000. Looking down below that, you have your statement of activity showing an overall net change a net position of about $171,000. Your revenue was up due to interest on the CDs that were held. And your expenses remained relatively consistent, and that's mainly made up of your administrative fees of about $50,000 that are paid each year. Looking over at NIIA, overall your assets were up just a bit. No current year additions to your capital assets. An increase in investments, which was up about $182,000. Your liabilities consist of security deposits on hand for all of the tenants that are in the building. So again, consistent, a slight increase over prior year. The statement of activities, again, on an increase in revenue due to interest earnings, and then an increase in expense due to additional repairs and maintenance. There's some parking lot work, and then other minor repairs at tenant spaces. And if we flip the page, we'll look at NCIDA and NCDC. Overall, looking at the balance sheet here, assets for NCIDA, a slight decrease due to a decrease in cash offset by an increase in leases receivable. Some new additional leases, some extensions of leases that caused that increase. You'll see deferred outflows of resources under your assets, and then you also have deferred inflows of resources. Really mainly due to the New York State ERS pension. That's an actuarial calc, as Seth mentioned. Overall change of about $7,000 year over year. Looking at the liabilities for NCIDA, a decrease of just over $1 million, just under $1 million, I'm sorry. Really due to a decrease in unearned revenue, which relates to the downtown Niagara Falls tourism target zone spending. So you'll see within the revenue and expense some grant funds that went out. The revenue was recognized and therefore decreasing the unearned revenue. Overall net position of $7.3 million, up about $284,000 year over year. We'll touch more on the revenue expense on the next slide. We have some graphs to show the changes year over year. Overall assets were down just a bit due to a decrease in loans receivable, as well as an allowance on those forgivable loans that Seth mentioned. You had new loans of about $272,000, offset by payments of $16,000. Overall, your liabilities remained consistent, and you had an ending net of just under $3.3 million. If we flip to the next page, we'll look at operating revenues for NCIDA and NCDC. So overall, an increase of about $700,000 from 2024. We'll touch on some of the more significant variances. Your fee revenue was down, and that's really just dependent on overall size of projects, the amount of projects that closed during the year. So not a significant change there. Your program income remained consistent. Rental occupancy and other was down $212,000. In 2024, you did have a land sale that generated about $80,000 of proceeds. And then there's a decrease of about $135,000 in rental income, really just due to changes in spaces needed by tenants and space occupied. Your grant revenue, as I mentioned, consistent with that decrease in the unearned revenue, you did recognize additional revenue for that target zone. And then your admin fees from affiliates, relatively consistent, a slight increase, and that's mainly the NCDC administrative fee does get eliminated for financial statement purposes. And then the last slide, we'll look at overall operating expenses for the IDA and NCDC. Overall, $4 million, really again driven by that grant expense. So more of the significant grant was a $900,000 grant to the aquarium. That was really driving that increase this year. Your salaries and benefits were up just $47,000 due to the raises on the first full year of the executive director position. Program contractual and occupancy was up about $106,000. Additional common area charges, repairs and maintenance, energy costs, things of that nature really drove that increase. Depreciation remained relatively consistent. As I mentioned, the grant expense, you'll see that significant increase there. And then the provision for uncollectible $140,000 that is expected to be forgiven by the organization.
So that's just the summary. So that through pretty quickly there, but prior years, too, no findings, no issues, unmodified opinions, which you're looking for. Really no real big adjustments. We do year-end adjustments for the pension accruals and stuff like that. But otherwise, the numbers you see throughout management monthly are pretty much as is. So we didn't look at any changes to those. If you have any questions, we can go through more details or also like to talk about.
I mean, I'm comfortable.
So the question is do you want them to stay for the board meeting, or because it's such a lengthy board meeting, maybe not do the presentation and you can just say that we had a presentation at the audit meeting and
I would think that, I mean, because there's a handful of board members that aren't here, if you could give us a 2 or 3 minutes on findings just overall in the spirit of transparency. Sure, I think that makes sense. If you guys don't mind.
actually there are 2 more on there.
Yeah. Okay. All right, so then I believe we need to move to present it, to accept this as presented to to move forward for the full board. So I will make a motion to present our audit findings, as is to the board as a whole. Did I get a second? All those in favor? Aye. Any opposed? Hearing none, that's perfect. North here? Mark.
Oh, no problem. Sorry about that.
No problem.
Yeah, as project reports, last month, and we are actually hoping that sometime by the end of April, some of the other older projects like Moss and River Road will be proceeding to closing in April. I do believe, I'm a believer, that Hotel Niagara may close in April. I really believe it. I mean, we've actually got a confirmation letter from them. And the only other one of consequence is we've been working again hand in hand with Saint-Gobain on their project, which has gone down in size. But because it was originally over 100,000 square foot, that means there had to be an extended seeker review on it. So that's why they went to the town of Wheatfield as lead agency on that review. Unfortunately, or fortunately, the project's been downsized a little to 90 or 95,000 square foot, which would not have triggered that. We could have handled it, and it could have been a long time ago. But they are in the process and have already appeared in Wheatfield. They expect to be on their April agenda. So come an April meeting, you may see a final resolution for St. Gobain. And I know they're anxious to move forward with it. So that's where we are.
All right, and our last item today is to reaffirm our Audit and Finance Committee charter, which is at the very end. I don't believe there are any material changes from previous versions. Just take a minute and review. Motion to review or to accept as presented. Can I get a second?
I'll second.
All those in favor? Aye. Any opposed? Hearing none, that passes. Can I get a motion to adjourn? I will second. All those in favor? Audit and Finance Committee is adjourned.